Good morning. Welcome to the AI Capital Brief. I am your ultra-intelligent financial broadcaster. Today, we decode one of the most transformative investment landscapes of the decade, deciphering biotech's next investment supercycle. This is not a traditional sector upswing. It is a foundational shift, a 5 to 15 years structural reengineering of human potential, powered by the convergence of biology, engineering, and computation. Understanding this dynamic is not optional. It is the absolute prerequisite for deploying capital strategically in the 2020s and beyond. The engine of this supercycle is the Compute-Biology Nexus. For decades, drug discovery operated on the scale of years and billions, a high-cost, low-yield empirical process. Now, artificial intelligence is collapsing that timeline. Consider the shift. AI platforms are moving beyond simple data crunching and are now generative. They are designing novel molecules, predicting their efficacy, and even modeling their interaction with the human body in silico, all before a single test tube is touched. A prime example of the capital flow validating this thesis? Xaira Therapeutics. In 2024, the AI-driven drug discovery startup closed a Series A round exceeding $1 billion. This isn't just a large seed round, it's a statement of intent from top-tier VCs. The future of pharma R&D is now a massive-scale computation problem. This is where capital is being directed, because this is where the friction and cost of the old model is being digitally dissolved. The second critical shift is the new discipline in capital deployment. The 2020 to 2021 funding boom saw excessive spending on early-stage platforms, innovative technology, but without a proven clinical asset. The subsequent market correction has created a scarcity of late-stage, de-risked assets. Smart money is now intensely focused on companies that have moved from proof of concept to proof of patient, companies with compelling, validated clinical outcomes. This is manifesting in robust M&A activity. Vertex Pharmaceuticals' $4.9 billion acquisition of Alpine Immune Sciences earlier this year is a textbook example. Big Pharma, facing the looming patent cliff and needing to replenish pipelines, is willing to pay a premium for high-quality, validated, later-stage assets. The message to biotech entrepreneurs is clear: science must be paired with commercial visibility. Investors are demanding a clear, articulated pathway to market access, profitability, and an impact that can change the established standard of care. This focus on clinical traction is de-risking the entire investment profile. Beyond the AI layer, we see three advanced therapeutic modalities poised to capture significant value. First, gene editing and cell therapy has moved decisively from theory to reality. The recent approval of the first-ever CRISPR-based therapy, Casgevy, for sickle cell disease is a moment of monumental validation. It signals a regulatory comfort with genuinely curative, one-time treatments. The global CRISPR market is projected to grow at a CAGR exceeding 20% through 2033. Investment flows are now shifting to solve the delivery problem. Safer, more targeted non-viral vectors and lipid nanoparticles will be the next billion-dollar IP battleground. Second, the GLP-1 revolution is expanding far beyond obesity. Pipeline expansion is targeting indications from cardiovascular health to diabetic kidney disease. The market valuation and revenue acceleration of companies like Eli Lilly demonstrate that a single, transformative drug class can power an entire market segment. Capital is chasing the next wave of combination therapies and novel mechanisms in this high-return metabolic space. The overall industry growth trajectory, projected to surpass $5 trillion by 2034, is not a gentle incline. It's a power curve driven by technology and need. For the intelligent investor, the mandate is to pivot your strategy. You must move past the simple biotech ETF and engage with the specifics of the convergence. Favor assets that demonstrate AI-enabled efficiency, leveraging computation to lower the cost and risk of discovery. Clinical validation, a clear, de-risked path to commercialization. Curative potential, focus on modalities that offer genuine transformation, not incremental management. This is the era of living intelligence, and the capital brief is clear: invest in the science that is redesigning the future.